All right, so pretty much there are a few things that I want to touch base on. And, the first one is overtrading, guys. And overtrading in my book is when you take more than 3 trades within a 24-hour time period. All right, so if you're taking 3 trades or more, let's say 4 trades, if you take 4 trades, because someday I might take 3 trades. So take, for example, if you take 4 trades within a 24-hour time period, you're basically over trading. All right. So you really, really want to limit the number of trades you take on a daily basis, because the reason behind this is that it is highly unlikely you're going to find 4 solid setup on a daily basis. Very, very highly unlikely. All right. You notice when I send signal, I might send out max about 3 trades for the day. So it's very unlikely you're going to find 4 solid setup on a particular day. Unless you're trading crazy amount of pair, then that's going to be the only case. But apart from that, you're not going to find 4 solid setup. All right. So over trading, try to stay between 1 to 2 trades on every single day if you can find that beautiful setup. If not, it is okay to not have a trading day, because not every single day you're going to find a lot of trades or good setups. So some days you're not going to find any good trade. You just have to call it a day. You just have to call it a day and be okay with that. So the first one is over trading. All right. So you want to take minimum, say about, well, I would say minimum, maximum 3 trades. So you want to stay within 1 to 3 trades on a daily basis. If you go over 3 trades, you are pretty much over trading. So that's the first one. The next one is over risking. I talk a lot on this one. And what I mean by over risking is that you can't risk 50% of your account in the market. If you risk 50% of your account, you're basically limiting yourself to 2 trades. All right. So you want to risk like 1 to 2% of your account. Worst case scenario, I might risk about 5%. But apart from that, I usually risk 1 to 2% on my account. I risk what I am okay with losing. All right, so risk. In this case, you want to risk 1 to 2% of your account. Worst case scenario, I might risk 5%. And if I'm going to risk 5% of my account on a particular trade, this must be a textbook setup with a very high probability where, I would have high hopes of this trade actually playing out. But if not, stay within the 1 to 2% risk. All right. And the same goes for over leveraging. If you over risk on your account, you will also fall in the over leveraging bracket. All right. And if you over leverage, it simply means that you're damaging your account just the same. All right. So please, guys, I know everybody want to make money, but it takes some time. It takes some time. You want to do the same thing every single day to build that level of consistency. And as time progresses, you're going to find yourself making a $50, $100, $150, $200 within a day. All right. Another one, guys, is greed. Greed is another one. Let me just clear these. The next one is greed. And what I mean by this in Forex, sometimes you're trading the market and you make a certain amount of profit. Meaning, take for example, if we had took position down here, the market push up to here, Instead of securing some position here, you want the market to fly all the way through the top of the screen. And then what happened in this case is that the market go like this, bam, pull back to our entry. The market gave you sufficient amount of pips that you could have secured. But because you're too greedy, you don't want to secure that position, the market do what? Pull back and take away all of that potential profit. So whenever the market gives you a decent move, secure some profit, manage your risk, move stop loss from here to here, and just leave a small position to run to see if the market will continue to push further up. So don't allow greed to get the best of you. I always tell person in the community, start my week, 10, 15, 20 pips. And as the week progresses, I look to hold my trades a bit longer so I can capitalize on 50 pip move, 100 pip move, 150 pips. All right. Don't be afraid to take the 10 pips, the 15 pips, the 20 pips whenever you get it. So greed, try and secure profit as frequently as possible. So if you get the profit, take it, because a lot of time you're going to find the market push up and pull back. Come down here, break back above the level, and then it just fly gone. All right? It gave you the opportunity right here to take some profit, secure some profit. All right? Always remember that there will be another trading day. All right? One trade not going to make you rich or wealthy in the FX market. All right? So it's from a consistent point of view, tomorrow is there. If you can get this beautiful setup again, you can catch another 40 pip, another 30 pip, another 20 pip. The day after tomorrow, if we have life just the same, come back to the chart, we do some analysis. Again, you can catch another 20 or 30 pip. That's how you should look at it. Not trying to take one trade to make $1 million, because it's not going to work like that unless you have a large account. So just take the profit when you get it, come back the next day, try and repeat the same thing. All right. So that's 3 important things I touch on. The next one, psychology. This affects a lot of person. And as I always say, the best way to deal with the psychology in the FX market is, it comes with experience. So the more experience you get, the more confident you are in your setup, you're going to be dealing with the psychology a lot better. If you check my last year this time, probably I was struggling mentally and I'm dealing with losses and stuff like that. But, a year later, way above that level, because I know that the strategy is valid and I am confident in my setup. So whenever I do a markup, I don't like the way it looks, I'm not going to take the trade, and I'll advise you to do the same. All right. So that's that. So always trust your analysis. If it don't fit your criteria, don't take the trade and just leave it at that. All right. So again, psychology, experience. So the more time you spend trading on a live account, better you will become at managing those emotions, dealing with losses and stuff like that. Because if you know that you're using a strategy that is valid, you know that the strategy is valid, 10 out of 7 trades, 6 out of 7 trades, you're risking 10 to 15 pips, you're making 20 plus pips on those trades. If you lose 2 trades, that should put you in a frame of mind where you're going to want to revenge trade the market, or you're going to try and make back that instantly. That's how a lot of traders messed up themselves. All right. If I take a trade and it is a losing trade, I take a step back, look at what I did wrong, how I could have managed risk better, and then I wait on the next setup. Very important. Very important, guys. So if you take a loss, don't chase the market to make it back instantly. It's not going to work like that. All right. So whenever I get a loss, just breeze out, give the chart some time, allow the market to build up back some momentum and start to farm price the way how you recognize it. and you give that same setup another chance. Because this setup, what you would be risking here would be about 15 pips. All right. Now the market is close to about 50 pips. So basically, you would have made 3 times what you were risking on this trade right here. That's the aim. 10 to 15 pips, and you're looking to collect 30 plus pips. Easy, easy, easy. That's how it goes. So take, for example, if you make 50 pips on this trade, and you know your next 5 trade, you're risking 10 pips. In order for you to lose back everything using the same lot size, you would have to lose pretty much 5 trades back to back. You would have to lose 5 trades back to back in order to lose that entire 50 pips. So that's the reason why I tell persons, say, hey, if you lose a trade, it is okay to take a step back. All right? Because you know your strategy valid, you know 7 out of 10 day, 8 out of 10 day, you're gonna win using this strategy. So if you lose 1 or 2 trade, don't jump in the market trying to make back all of that instantly. It's not gonna work like that. It's just gonna mess your account up. And these are some of the principles I abide by on a daily basis. It takes time. Takes time. So don't rush the market or try to force trade or try to revenge trade the market. You're gonna mess yourself up. And these things I am pointing out now is what most new trader would have experienced. It is from my experience. And if you talk to other person, they're gonna share that from their experience just the same. All right. When I started out, I didn't know all of this. You know, take some time, you know, mentoring and stuff like that. And as I grow, I figure out certain things. That's the reason why I said, hey, I'm not gonna sell a course only, but I want person to get that live feedback. Zine? So, you know, guys, those are some important points. So just take them into consideration and you should be okay. And if you can focus on 1 to 2 setup for a month, 2 months, 3 months, you're gonna see the difference. What kills a lot of us in the Forex market is that we are not patient with ourselves. All right. We start to go on a journey and, you know, we hit a roadblock, things not going the way we want it to, and then, bam, you mess up everything. And then next week now, you see the market start move beautiful. I say, damn, only if me just be patient and wait. You have to be patient. You have to be patient in the market. If you're not patient, then, you know, it's just not going to work out. And what we trade on in the FX market is patterns. I know this pattern. So once I see this, I know the probability of the trade playing out. So we trade on repeated pattern. We know so the market move like this. So we know where to take entry. See? I identify that, hey, the market is doing a reversal trend. The first potential buys, I think was here. And the reason being, you know, we have been in a downtrend all along, you know, creating those significant lower highs, lower lows, you know, push up, we start to consolidate. And then what happened here? Bam, price break the trend line. And we break a major resistance here on the 30-minute and also on the 1 hour time frame. Get the trend line, run it. What you find that price did pull back, retest the resistance here, and also the trend line. So perfect buying opportunity right here. I missed this setup because when this occurred, it was like 3, 4 o'clock in the morning. You know, was asleep at that time. Push up, did a little pullback, nice potential retest. Would have caught the entry, bam, push up, consolidate, trading above this level right here. That's the reason why I have my buys here. And if you look at this, price was pulling back to do a retest on the trend line. And currently we are pushing up. So I am able to identify that the market was reversing based on how, we're creating those lows and highs, pick them out, draw up my trend line, look for my entry, safe place to place your stop loss below the wicks right here, and the market just continue to shoot up. So if person not took this trade, you would have made some beautiful profit. It's just that it took some time to play out. All right. So that this is one thing with VIX. Sometime you will get in and the market will shoot and give you that big move. Other times you might have to be in it for 12 hours, 24 hours, or a day to get the market to give you what you want. Because if you find that this level is getting respected, we're not breaking and staying below the level. Each time the market tap into this area, it reject. Tap the area again, reject. Came back, reject. Try to break below, close back out of the area with support, bam. We'll find the momentum we need, price breaks outside of structure. All right. We are pushing up to a nice little daily support here. And if you look to the left here, we're going to have some resistance on the 30-minute and also on the 1 hour time frame for potential rejection. But if the market break above here, then it might continue to push up. But yeah, the trading VIX is just easy, guys. It just takes patience. You have to be patient with the market. Once you are patient, you're good. You're not gonna have any problem. Not gonna have any problem. So as I tell a person, the easiest way to analyze the market, whenever you come to the chart, guys, you want to identify your most recent daily support and resistance. Once you mark off your daily support and resistance, you know the range you're actually trading between. So if you look here, we'll have a daily support here. All right. If you look here, we'll have a daily resistance here, and we also have another daily resistance here. All right. So we know that, take for example, at this point, the market was trading in between this daily resistance and this daily support right here. All right. So we know that we would be trading between here. You go down to your 4 hour time frame, you want to identify your most recent levels on the H4 time frame. So you want to identify some levels that actually stand out. For me, on the 4 hour time frame, this support right here pretty much stand out because the market came down and created a low. We had another H4 support right here. So you want to mark off the most recent levels. All right. And as price push up, breaks the channel that we're trading in. This was the channel right here. We're bouncing. Let me make this a bit smaller. We're bouncing between these levels right here. All right. So it came down, it rock bottom, created a low. And what the market did, it push up, pull back to form a higher support on the 4 hour time frame, and then with momentum we break the structure of the trend line, or the trajectory of the trend line. The market pull back, did a nice little retest. This would have been a perfect buying opportunity for the market to continue. So you see, from the moment price breaks outside of the channel here, the market is giving me an indication that it is trying to change trend. All right. So once it breaks out, you just wait for a retest with the form of support on 1 hour time frame or the 30-minute time frame. Sometime I might get in without support. So take, for example, hold on. So let me just share. All right. All right, so as I was saying, base, can you mute the microphone for me? As I was saying, base and price doing this. Let me know if you guys are seeing the drawing.
Yes.
So as I was saying, price was pretty much in a downtrend. We're bouncing between, support, pullback, resistance, a push down, support, a pullback, resistance. So you get your one touch, two touch, all the way out. All right. Same again, one touch, two touch, all the way out. Then price came down. We created a low, push up, pull back to form a higher support on the 4-hour time frame, and I also have another 4-hour support right here. Price came up to the level here, did not respect the level. So even if you took some buys here, based on the fact that price is pulling back to retest your trend line and you get stop out, breeze out, give the market some time. What happened is that the market breaks structure. To push up, and we created a new high here, higher than the recent significant high, which would have been here. Market did what? Pull back, farm support, perfect opportunity to take some buy for the market to continue, because we break the structure right here. We created a new high, we pull back, farm support, and also farm a higher low, higher than the previous significant, which should have been here, which should also be a retest of this trend line. So it makes perfect sense to look for a buy in this area for the market to continue to push bullish. All right. We managed to get above this level right here on the 1-hour time frame, which at the time I was looking at it last night as a potential retest of the trend line here for the market to continue to push bullish. But separate and apart from that, set buy limit at the daily resistance here, because this is a solid level on the daily time frame, and if we break above our daily resistance and we're trading above it, and it pretty much lines up with our trend line here, then a retest in this area makes perfect sense for us to buy to capitalize on further upside, because the market already gave us that indication that, hey, I am ready to change trend. So you, at this point, you would be looking for potential entries. All right. Again, where I take my entries, guys, mostly at the low of the trend line for buys. And if I'm looking for sells, it's gonna be at the high of the trend line, which is here if the market is bearish. Whenever the market is bullish, meaning we are going up, I look for buys in this area with support on the 30 or the 1-hour. And sometimes whenever the market weakens to the area, I might take a buy for it to continue to push bullish, because if the level is solid, you're not really looking for price to break below, say here to stop you out all the way down here. You're looking for the level to get respected and hold, and the market to continue to push bullish. But it is always good for you to wait and support whenever you're taking buys, and also sells for resistance, wait and resistance for sells. Very, very important. So this was the whole idea behind this setup. Gives us an indication that the market is ready to push bullish. So get in on the lower time frame and look for your potential entries. So these levels right here, buys, potential buy right here on the wick. Nice to buy right here. Push up, came back to retest the solid level. You buy again, and that's how you capitalize on these moves. So it's not hard how to analyze the markets. It's not hard. Easy, but it takes time, practice. The more you practice, the better you will actually get at it. All right. All right, so this is the VIX 100 one. I sent a signal on this last week, and let's look at on the daily time frame. Let's look at the daily time frame. You know, pretty messy on the daily time frame. So you get down to your daily time frame, you want to identify those levels. So you have a daily support right here. You have another daily support right here. You know, daily resistance. So this is pretty messy. All right. And if, you know, break above these levels, then we have another support right here. So daily support, daily resistance, you know, daily support. You go down to your 4-hour time frame. You go down to your 4-hour time frame. Looking at it on the H4 time frame, you will see that it pretty much lines up with our daily support. So this is a strong level down here. Strong level. All right, so we have our 4-hour support here. We have one here. We have another solid level right here. We have resistance here. We have resistance here. And also have resistance here. All right, but the overall trend of the market from here to here is bullish. But you know, we hit some highs here, and what the market did, the market starts to pull back. So right here, this is a significant high. This can be considered as a significant low, significant high, you know, significant low, significant high, significant low. And then the market start to give us an indication for potential change of trend because we're sitting at a solid level on the daily time frame, which is here. And price starts to create what we call higher lows. So based on the 4-hour time frame, this high breaks above the previous significant high, which should have been here and also here. So this gives us the indication that from it breaks above the level 1, it can a second time for the market to continue to push bullish. But again, we're not trading the chart on the 4-hour time frame. So let me just remove these small boxes right here. So what I normally do with the 4-hour time frame, you know, look at the most recent H4 support and resistance just the same. And you can mark up your trend just the same. So 1 touch, 2 touch all the way out. And then you go down to the 1-hour time frame. Now, when I go down to the 1-hour time frame, this is where I normally draw my trend line from. All right. We identify that, hey, we came down, we created a low right here. All right. Created a low right here. The market did a nice push, break above 2 significant highs here to the left. One here. And we have another significant high here. All right. Based on the fact that we were pushing in a downtrend, I think it would have been safe to, you know, add our first touch here, or second touch probably about here, and go all the way out. At this point, you find that the market breaks your trend line and will push and break above the high. So I think you would need for the market to pull back to do a potential retest of this trend line, forming support for the market to continue to push bullish. But we got a weak support here below the trend line, so there is still no buys as yet. All right. What happened here? So this is a move from here to here and a pullback. What happened here again is that the market push up, you know, create a higher low, push again, and the market pull back, it gives you the perfect support here to take entry with stop loss below this level. All right. So at this point, you could anticipate the market to continue to push bullish. All right. At this point, you could anticipate the market to continue to push bullish. So if I am going to take a trade on this now, guys, I'm not going to take any sells because, you know, we are at resistance right here. I'm not going to take any sell. I would love for the market to pull back to my buying zone, which would be at the base of this trend line. And this is solely based on the fact that the push and created a new high here, which is higher than the most recent significant, which would have been here. So at this point, buy from the base here would have been valid for me. We sent a signal was sent on this last week for sells here. Stop loss was above this level. It didn't get stopped out and the market dropped for 20 pips. You know, so person could have secured some position on this and it did a complete reversal, break the trend line, create a new high, pull back, and then start to trade above the level. So even if I run this trend line all the way out to here, you know, if it pulls back here, it will still be above this trend line for us to take buy for the market to continue to push bullish. So this is an easy way how you can go about analyzing the volatility index. You want to identify the trend. You want to identify the highs and the lows of the trend. All right. So even though the overall trend is bullish, you go down on the smaller time frame to see what is taking place. You want to identify the trend on the smaller time frame, but at the same time, you still have to bear in mind the overall trend of the market. All right. So this is another easy way how I go about analyzing the volatility index. You know, so if the market can do a pullback, then could look for potential buys. Stop loss could be safe at about 15 pips. And about here, overall target could be here at about 59, 60 pips, you know, and you can bear these levels in mind. So you have two solid daily level here that the market can potentially reject and bounce from to continue to push bullish. And if it breaks through, farm support at the base here, then you look for buy. And if you take some buys here, you find that the market is start to reject these levels, daily resistance, daily support, strong level, you need to manage risks. But if you break through, you know, you can use the daily support and resistance and also the H4 support and resistance as potential take profit in the market because these higher time frame levels are strong. So it's very likely that whenever the market gets to these destinations, the market can reject it. All right. So that's the reason why I put these levels on the charts. So for this, a retest down to here would make perfect sense. We came down and created a low, we push up, we created a high. We got our first touch here, our second touch here, all the way out. The third touch, price came back, created support, we bounced from the level, and the market shoot up, you know. So that's been about 40 plus pips. Easy. And this is still pushing bullish. You know, at about 40 pips. All right, so for this last week, this was the volatility 100. I don't send signal on this, but I caught a trade here based on the fact that, you know, price, we had our first touch here, second touch all the way out. Price came back, tap into this major support on the 4-hour time frame and also on daily time frame, the 101.30, you know, started to consolidate, got into entry, and I was able to secure some position on the market, you know, breakthrough. But another thing with the strategy that I am going to share with you guys, if you find that the market breaks and close outside of your trend line, or first touch or second touch all the way out from support here, pull back and then push up, then you got these candle breakthrough the area, bam, break and close back above the level, and then you get something to close like this. Right here, you could look for potential sells for the market to continue to push bearish because What happened is that price breaks and close outside of structure, which should have been this candle right here. This candle close outside of the structure. We got another candle to close outside of the structure. We got another candle that basically close above support and slightly above the trend line. This candle close back inside of it. All right. This candle wick up and then bam. This one breaks and close outside of the area. So right now, what I'm looking at here is a potential break and retest. All right, it goes like this, push down, pull back, form resistance, and then the market push again. All right. Potential break and retest of this trend line right here. So I think here would have been a good opportunity to take some sell. And from here all the way down the market, I think the market dropped over 200 pips. All right, market drop over 200 pips. Here again, strong confirmation that we are pushing bearish. If you look to the left, lots of clean candles. We are outside of the trend line. So even with this candle pulling back to do a retest, it would have been a bit risky, but I think some sells could have been taken here for the market to continue to push down, because the market already gave us the confirmation that the break structure push down and created a low, and we did a little pullback. So just to retest the level one final time before it continues to make its way down. All right, so I got the buy and I lock it down, so I missed this entire play. But again, whenever you mark up a trend line and you find that price is respecting your trend line. No, let me draw it like this. So take, for example, you have a trend line like this and you find that price is respecting your trend line, and then you get something to break your trend line. What you can do is to wait for the market to retest here with support, then you look for a potential buy. Then at this point, you can identify this as a significant low, this as the recent significant high. You get your first touch here, and you go all the way out to the second touch. So once the market pull back a third time to retest the trend line with support, what they're going to do here is look for some buys for the market to continue to push bullish. So a break and retest of the trend line makes perfect sense to buy. If you find that the market bump close back inside of the level and it start to respect the level, then at this point you can look for further sell for the market to continue to push down to the base of the range. So it's very, very easy, guys. Very, very easy. It takes time for you to get, but once you understand how the market moves, you're not going to have any problem. Trust me. You're not going to have any problem. So what I'm going to do on this now, remove everything, and we're going to do some fresh analysis. Remove all drawing tools. We're going to start with the 4-hour time frame. All right. So looking at the daily time frame. So looking at this now on the daily time frame, we can see, can mute the microphone for me? We can see that the market is pushing down into a daily support to our left-hand side. All right. And we also have another daily support right here. And have a daily resistance right here. So these are the levels we are actually trading in between. All right. Go down to the 4-hour time frame. You look at what is taking place on the 4-hour time frame just the same. You want to identify your most recent levels, the levels that actually stands out the most to you. So looking at this now on the H4 time frame, our support here. we have a resistance here, which lines up with our daily resistance. And I also have another H4 resistance here. All right. Clearly, the market is in a downtrend. The market is pushing bearish. We are in a downtrend. So at this point, I would be more interested in buys than actually sell. In sells than actual buy. All right, because the market is bearish, you want to look for sell. If the market is bullish, you want to look for buy. If you look here, there is a lot more red candle than green candle. The red candles are the bearish candle, which indicate that the market is pushing down. You go down to your 1 hour time frame. So when you go down to the 1 hour time frame, this is where I identify a level that I can actually draw my trend line from to identify the channel we're actually trading in between or in. Not loading up. Like the 1 hour time frame stuck. All right, let's use a 30-minute time frame. All right. So we're going to use the 30-minute time frame. So this here is a very solid level on the 1 hour time frame, the 30-minute, and also the 4 hour time frame. So I think based on how the market is moving, it would be safe to attach our trend line from here with our second touch here and we'll go all the way out. And this is simple analysis, guys. What you can also do, you can also clone this line, clone it, bring it to the base right here. So currently, this is the little channel the market is moving in. All right, we are doing this. Perfect second touch all the way up. Push down, start to consolidate, did a little pullback here, push again, bam. Perfect opportunity for sell, forming resistance at the trend line for the market to continue to drop bearish. All right. So this would have been the opportunity to take some sell right here because we already identified that the market is bearish. So we are interested in sell. We identify a level that we actually draw our trend line from based on the fact that we have a solid H4 level here, 1 hour and also 30 minutes, which the market is respecting for resistance. So we'll get our first touch here, our second touch here, and we'll go all the way out. Nice retest for sells for the market to continue to push bearish. All right. So even if you find that the market pull back to here, it is still okay to take some sells for it to continue to push bearish. But if the market push down, respect this law, farm support, push and break the trajectory of the trend line or outside of the channel, at this point, it would give me an indication that the market ready to change trend and continue to push bullish for a while. So what I would love to see at this point is a pullback, farm some support, draw my trend line, then I'm going to look for buy at the trend line. All right, for the market to continue to push bullish. This is how you identify a change of trend in the market, guys. This is how you identify a change of trend in the market. So even if the market wants to pull back to the trend line and farm resistance 100 times, I'm going to be selling it down until I get a candle. Breaks it, pull back, farm a higher low respecting the previous, then I'm going to draw my new trend line and I'm going to start looking for buys because, again, I am able to identify that whenever the market starts to move like this, and it respect the trend line, it simply means that we are pushing down. It starts to break the trend line, the market is trying to change trend. So at that point, I'm going to be interested in buys. So based on how the market is moving now for the volatility 100, I think it would have been safe to take sells in this area. Could have had like 13 pips stop loss. And you would have been up, to 30, 39 pips, 40 pips basically, And I think this level right here at 55 pips could have been your overall take profit based on what I'm looking at. So this is another simple breakdown. So you can make note of that. I'm gonna leave the volatility 51S for last. Let's take a look at what we got here for the VIX 10. That's the VIX 10 1S. So let's take a look at this. So pretty much, again, you go to your daily time frame, remove all drawing tools, and I'm on the daily time frame. Looking at it on the daily time frame, clearly we have a daily support here. So DS for daily support. All right, you go down to the 4-hour time frame, just the same. You want to identify the most recent 4-hour levels. All right, so looking at this on the 4-hour time frame, consider to have a H4 support here, have one here, which pretty much lines up with our level on the daily time frame. And we also have another 4-hour support here, so the market start to create a strong level, and we have a little resistance right here. All right. So what the market did, it came all the way down, created a low right here. I'm gonna change this color. Created a low right here, and we push up, and we created a high right here, and a pullback will form a higher low. So at this point, what it is telling me is that, it might change trend, because this is a big push towards the downside. This is a big push towards the downside. And, we start to create a high here, create a higher low respecting the previous, we push again to break the most recent significant high here. All right. So at this point, we can say, hey, the market is trying to change trend. So identify our daily levels, identify our 4-hour levels. So I want to go down to the 1-hour time frame to look at how we can go about drawing our trend line. Zine? All right. So looking at this now on the 1-hour time frame. All right. This is the extreme low, which would have been our first potential touch, or second touch right here, and we'll go all the way out. All right. So from here to here, you're looking at a 70 pip move all the way up to here. So this is a pretty big channel. Go ahead and clone this. All right, clone this. So as you can see here, based on the trajectory of this, we clone it to this. We can identify that, hey, the market is moving between these levels. Market is moving between these levels. So if I'm going to be taking a buy, I would need price to retest at least this H4 support right here to take some buy for the market to continue to push bullish. All right. If it's a case where, the market, we were looking for sells, then I think if price breaks above these low right here and create a new low and pull back to do a retest in this area, then it would be safe for further sells. All right. So this is the only way I would actually trade this now. Pull back here with support for buys. If it breaks, wait for it to create a new low, pull back, resistance, sell it down. All right. So I'm not gonna be looking for sell based on the fact that we are at resistance, etc., etc., etc. Gave me the indication that, hey, I want to change trend. So this would be my area of interest for potential buys for the market to continue to push bullish. Sometime I might take a counter trend trade, meaning, we are going against the trend of the market. Say if the market is bullish, I might take a little sell, and this is solely based on the fact that the market is at the top of the channel. So even if I'm going to take a counter trend trade, based on the fact that we pull into here, you know, safe stop loss here. I wouldn't be taking this at my max risk. So take, for example, if I normally risk $200 on a trade, I might cut it down to $100. If I'm risking $100 on a trade and a counter trend, cut it down to $50 for that. All right. So that's how I trade counter trend. So if I'm going against the trend of the market, I normally cut my risk in half just to be on the safe side. But apart from that, I would be interested in buys from the low here for the market to continue to push bullish. You know, so support in this area should be okay, you know, and a safe stop loss below this level at about 14, 15 pips should be okay, and you can anticipate the market to continue to push bullish. I'm gonna save this. Let's save this. Save this. Save that. All right, so this is the only way I would trade the volatility 10-1S. All right, that's the only way. Now, this is the 25-1S. I trade this a lot. Trade this a lot. Very, very nice pair to trade, you know. So let's do some fresh analysis on this. Remove all drawing tools. So clearly we can identify that, hey, the market is bearish, so we are pushing down because, you know, we start to create some lower support, some lower resistance, lower support, lower resistance, lower support. So we identify that on the daily time frame, the market is bearish. But again, we're not trying to trade all of this, you know, so let's stick like within the most recent 5 to 10 daily candle. Let's focus on those. So we have support here, and we have resistance here. And we also have resistance here. So these are the most recent significant levels. And, you know, we have a little daily support down here just the same. So let's clone this, bring it here, which price tapped into the here, I respect it. And, you know, reject it and push bullish for a little while. So let's go down to the 4-hour time frame to see what is going on the 4-hour time frame. So looking at this now on the 4-hour time frame, our daily support right here lines up with our H4 support. We created a H4 resistance right here. We have another resistance right here and one here. These are the three most recent important levels. And with this daily resistance, just the same, it lines up with some H4 support in this area. I think I can mark off this one as well. Also have it here and price came down and tapped into it here. So that should be okay. All right. So while I'm doing all of this, I'm still bearing in mind that the market is bearish. So I am more interested in sales. So we came down to the 1-hour time frame now, guys, and identify that, hey, we have a low here. Have another low here. The person who is munching on that snack. Can you please mute your microphone? And we have another low right here. All right. So I think this week we're looking at some short-term buys based on this. You know, we're looking at some short-term buy. And this is solely based on the fact that, you know, market pushed down and created a low, push high, higher low, respecting the recent significant, did a lot of retest, you know, potential buy, push again, you know, retest, consolidated, break and close below the level. So at this point, sells would be more valid based on the fact that the close outside of the trend line form resistance, you know, so you can look at potential sell to sell off the market. Looking at this as it is now, this is the lowest point in the trend. All right. This for me is the most recent significant high in the trend, or the highest point in this that I am looking at right now. So if I'm gonna draw a trend line, it would be from here to here, all the way down. All right. Let's clone this to see if it makes sense. So this makes perfect sense. One touch, two touch all the way out, one touch, two touch all the way out. So in this channel and the market break the channel and it starts to create a new channel. All right. At this point, the market is pretty much struggling. You know, break, did a little retest. The body of the candle start to get small, which indicate low volume. And then this red candle, you know, close back inside of the trend. So I think if this current 1 hour candle can close below the trend line, then it simply means that this move would have been a little fake out because the break above failed to maintain momentum. So if it closed back inside of the trend, this gives me an indication that the market can continue to push bearish. But if it farms support, say above this H4 level right here, then it simply means that the market can push bullish if we close above the 4-hour support right here. All right, so as this is now, it's not the best thing to trade, but if we can stay outside of the trend line here, then I think it makes sense to look for buys for the market to continue to push bullish based on the fact that we have the first touch here, the second touch all the way out and a push, break the level. And if we are staying above this level, which would be our H4 support level, then, you know, it makes sense for the market to continue to push bullish. But if we break and close back inside, then you can look for further sells for the market to continue to push bearish. So this is the only thing I am actually looking at for this. All right. Now, the volatility 51S, it's a volatile pair, very, very volatile. It is similar to gold as it relates to the pip movement, like 10 pips is like 5 pips on regular pairs for this. You know, so it's extremely volatile. And this, honestly, still doing a lot of testing on it. You know, still doing a lot of testing on it, but it is extremely volatile, guys. So my advice to you, you know, you can trade it, but, you know, I would advise you to really, really focus on something else until you master a few other pairs, then you can actually look to trade this. It is extremely volatile. And for me, it is the same strategy, the same strategy I use to trade it, same strategy. Identify your levels on the daily time frame. You go down to your 4-hour just the same. On the 4-hour time frame, 4-hour support, 4 resistance. We're looking at the channel. The channel is pretty much bearish. We are pushing down. This H4 levels pretty much lines up with our daily resistance. So I think that is okay as is. You go down to your 1-hour time frame. You want to identify your channel on the 1-hour time frame. All right. So looking at this now on the 1-hour time frame, I think this is the lowest point in the trend. The lowest point. So if I'm gonna draw a trend line, in all honesty, because as you can see, price has been respecting this area on the daily time frame and also on the 1 hour time frame. Just the same. So if I'm gonna draw a trend line, it would definitely be something like this. First touch right here, which is the lowest point. Second touch on the wick right here, and we go all the way out. But you see, the thing is, even if you find that VIX 51S pull back to do a retest, and you're going to take a buy, say about here with stop loss here. At this, you're looking at about 14 pips. Here, you're looking at about 23 pips. And if you're going to keep stop loss down here, you're looking at about 42 pips. So it is extremely volatile, and 10 pips in this is nothing. Like literally 10 pip is nothing. These candles right here, this is 60 pip. This 1 hour candle is 60 pip right here. All right, within 2 hours, you're looking at 110 pips. From here to here, this is a 2 hour move, and you're looking at 100 plus pip. Just like that, right off the bat. From here to here, again, and 2 hour bullish push, 100 pips. So you will even get a 30-minute candle giving you 50 pips. You will get a 1 hour candle giving you close to 100 pips just the same. So it is extremely volatile. So for this now, if I'm gonna be looking to take a trade, it will definitely be from here with a retest of this trend line for the market to continue to push bullish, and my stop loss would be at about 15 pips below this 4 hour support right here. And this is solely based on the fact that we have a low here and we have a higher low here. And you know, the market was pushing bearish. So you know, this high standout here came down, created a low pullback, created a high, you know, created a lower low, lower than the previous, and we did a little pullback to retest the level right here, which is also at our daily resistance. So it would have made perfect sense, you know, to look for some sells in this area again for the market to continue to push down. But at this point, this low did not break below the one here. Let me zoom up this so you can see it a bit clearer. So this here is higher than this here, which would mean we created a higher low in this area, which gives us the indication of a potential short-term trend. So pull back with support, or even if price within to the area, you know, potential buy, and it can target this 4 hour resistance. But again, guys, extremely volatile. So I would advise you to work on some other pairs and just leave this one alone for now. If you want to play with it, the option is yours, but that's my advice to you, you know, because 10 pips within the blink of an eye, you know, so that's that. So again, we did a few breakdown, and as I can see, the 1 hour candle close, you know, from a little support. And this is getting a bit tricky, but I think it might buy up, you know, because if you notice, this 1 hour candle here did not break below the low of the previous year. You know, weak bullish close. So let's see how it goes. But that's that. So we did a few little breakdown, and some important information was shared with you guys, you know. So let me know if anybody have any questions.